Hello and welcome to the weekend market update. Today is 3rd of June. So the week started off slow but finished on a very strong note. So let's look at the weekly performance of the major averages. You can see that Russell was the best performing among the four indices, up 3.26% on the week, followed by Dow, S&P 500 and Nasdaq 100. In fact, prior to this week, Nasdaq was the best performing index, but this week it was the worst among the four. Prior to this week, Dow and Russell were the weakest performing, but they were the best. But they had a very strong performance this week, especially on Thursday and Friday. So let's have a look at the relative performance in this chart. So this chart shows the performance of the indices. You can see that Nasdaq is up almost 33% on the year. This is a year-to-date performance, followed by S&P 500, which is up just under 12%. Dow and Russell lagging behind. Dow is up under 2% and Russell is up under 4%. So at the moment, all four indices are above, they have positive return. And in fact, Dow and Russell had a very strong week, and that's why their performance is positive on the week. But they were below, they were in negative territory prior to this week. So let's try to understand what happened. Well, there are a couple of events that basically led to a big rally on Thursday and Friday. The first of all was on Wednesday, the Democrats and Republicans, they agreed to raise the debt ceiling, and that pretty much avoided an imminent recession. Failure to raise the debt ceiling could have led to a recession, according to many economists. So that was the first positive news, which means that the market rallied on Thursday on the back of that. And then on Friday, the non-farm payroll came out, and it showed that the labor market was still very strong. So if you look at this, the report showed that the economy added 339,000 new jobs. In fact, if you look at the last few months, the economy has been adding more and more jobs. 217, so this is for the month of May, so this is April, and this is March. So you can see that the economy is still quite strong, the labor market, and effectively that reduced the chance of an imminent recession. As a result of those two events, we saw a big rebound in the stock market on Friday. Now, if you look at the sectors, you'll see that so here we have the 11 sectors that make up S&P 500. The best performing sectors so far obviously has been the growth sectors, XLK, XLC and XLY. So these were the sectors that were basically pushing S&P 500 up. But then there's these 8 sectors which have been underperforming, and they were basically dragging S&P 500 lower. These 3 sectors together make up about 45% of S&P 500, and these 8 sectors make up roughly 55% of S&P 500, and you can clearly see that these sectors were moving lower until Thursday and Friday. You can see that big rebound in all of them, and as combined with the fact that these 3 sectors, the growth sectors, were already strong, and that basically led to a big rebound not only in S&P 500 but also in Dow as well as Russell 2000. Now the Dow and Russell got a bounce because these sectors play an important role for Dow and S&P 500. If I show you the performance of Russell and Dow, you can see that you can see Dow and Russell. You can see the Dow and Russell's performance matches to the of these sectors, because these sectors, as I said, play a significant role in Dow and Russell 2000. as well as S&P 500. But S&P 500 also has a 45% exposure to growth sectors. The exposure to growth sectors in Dow is considerably less than S&P 500. That's why Russell and Dow had been underperforming. But once these sectors rebounded on Thursday and Friday, both S&P 500, Dow and Russell rose sharply. And as a result, you can see that Russell ended up being the best performing sector this week. Dow also was up 2%, and all three of them managed to outperform NASDAQ on the week. Now, looking ahead, so let's look at the averages one by one. So on a weekly basis, so this is S&P 500. On a weekly basis, what we see is that S&P 500 had been stuck in this range for a long period of time. 3,800 on the downside, 4,200 on the upside. And this week you can see that it made a decisive move above the 4,200 level. So that is definitely positive. If I bring in the moving averages, you'll notice that S&P 500, you'll notice that the moving averages, so let me just hide, right. So you can see that the weekly 20 and 50 moving averages, they've turned and they've started to move higher. You can see that S&P 500 found support at these moving averages, and now it's moving to the upside, and the moving averages have started to move higher. So that's a positive sign. If we look at the momentum indicators, you will see that RSI is now moving above. It's moving higher. It's well above the 50 level, and you can see MACD is started to now move well above the zero line. So both the price action momentum indicators on a weekly basis are positive at the moment. So what are some of the levels that we need to watch out for on a weekly time frame? Well, on a weekly time frame, the first level would be this one. So this level is 43.25. Now you can see that in July there was a big rejection at this level, and S&P 500 went on to lose almost 20%, eventually making a bottom here in October. So this would be an important level to watch. 43.25, which is not far from the current level. S&P 500 closed at 42.82, so this is just like 43 points away. So that would be the first level to look out for. The next key level is this level, which is around 4,600. Well, that's because S&P 500 had had traded between S&P 500 traded between these two levels, 3,800 on the downside, 42 on the upside. That's a 400-point range. A full measured move of this range projects a target to this level, which is around 4,600. Now, obviously, I'm not suggesting that it's going to get to that level next week. S&P 500 traded in this zone for many weeks, so this would be a target in weeks and months, and this is a projected target. Doesn't mean that it's going to get there, but this would be the projected target, and if it does go there, it could take many weeks because it traded inside this zone for a long period of time. So those would be the weekly level to look out for. So let's have a look at on a daily basis. On a daily basis, you can clearly see that price action is very constructive. You can see series of higher lows being formed, and 43.25, as I mentioned, on a weekly basis is this level. So you can see it's coming from right there. So that would be the next logical place for it to go. And on a daily basis also, you can see that the momentum indicators are positive. MACD is well above the zero line. RSI is well above the 50 level. So 43.25 would be the near-term resistance. Support would be, first of all, this level right here, which is around 43.25, and then the 4200. So those would be the levels to look out for. Now, for NASDAQ, if we look at NASDAQ, so this is NASDAQ 100. You can clearly see that NASDAQ's chart is much more stronger, because you can see series of lower highs and a very strong move to the upside, especially in the month of May. You can see the momentum indicators are very strong. It's still moving higher. Overbought, you might say NASDAQ is overbought, but it's not yet given a sell signal. We don't have any MACD cross like this way or like this way at the moment. RSI is still moving higher in overbought territory, but it can stay overbought. So what are the levels to watch for NASDAQ? So for NASDAQ, the levels to watch, first of all, would be, so let's crunch it up a little bit. First level would be this level right here, which is around 14,750 level. You can see that once it broke this level right here, NASDAQ had a big drop. So that would be the first level around. So it's a range of 14,750 to 14,800. So that would be the first level. And the second level would be this level right here. That is around 15,265. So those would be the levels to watch out for NASDAQ. Now, on a short-term basis, as I said, it is overbought. So, some kind of consolidation, pullback, I think is going to be healthy, especially when you're considering the fact that NASDAQ has started to kind of move away from these moving averages, the daily 20 and 50. You can see that during this rally, it has found support at these moving averages a couple of times. So it hasn't touched the daily 20 EMA in some time. The daily 20 EMA is around 13,560 at the moment. But you can see that it's starting to move away. So we could see some kind of a consolidation, some kind of a pullback in NASDAQ. But so those would be the levels to watch. Upside, 14,750 to 14,800, and obviously on the downside, the moving averages, because at some point, you would expect it to pull back and touch the moving averages. But even if it pulls back to the moving averages, there's no danger of any technical damage, because it will maintain this sequence of lower highs. Only if it breaches, say something like goes underneath this, then the structure will start to look negative. But at the moment, there's no signs of it. So that's NASDAQ. If we look at Dow, so this is Dow. So let's have a look at Dow. So the Dow had a very strong week, as I said. If I just zoom it out, you'll see that it started to make series of lower highs. So let me just zoom it out so you can see. It started to make series of lower highs right here, lower high, lower high. But then we had this big rally, and that changed that, because now from here to here, we now have a higher high, and then from here to here, we have a higher low. So the structure is now, looking better. And then if you draw a line like this way, trend line, you can clearly see that the trend line has been broken. So this is definitely looking positive. If I look at the momentum indicators, you can see that RSI on a daily basis had reclaimed the 50 level. MACD hasn't crossed back above the zero line. It is turning right now, but it hasn't yet crossed above the zero line. If it crosses above the zero line and does that, that would be quite positive. That would suggest that maybe there is more upside to Dow in coming sessions, weeks, and so forth. So the technical picture is definitely has improved and looking better. If you look at Russell 2000, Russell was stuck in this big consolidation zone for a long time, and then it broke out of that zone on Friday. So this is definitely a very positive move. Even if you look at it on a weekly basis, you'll notice that on a weekly basis, you'll see that this was the range. It was stuck for many weeks, and then it has closed above that on a weekly basis. So that's definitely looking better for Russell 2000. Momentum indicators are now also beginning to look better. You can see RSI has reclaimed the 50 level. MACD is now crossing above the zero line. So all in all, this is looking positive. So coming back to the sectors, as I said, these sectors, these are defensive sectors, and if these sectors continue to move higher, I think that will definitely benefit S&P 500, Russell, and Dow. Nasdaq, because it has gone up quite a bit, I wouldn't be surprised if Nasdaq basically kind of slows down a little bit. So let's bring Nasdaq right here. So you can see Nasdaq is way up there. So it's up almost 35% on the year to date. So I wouldn't be surprised if Nasdaq kind of slows down. If some of the growth sectors like XLK and XLC, they start going sideways, and then the slack gets picked up by these defensive sectors, that can still push S&P 500, Russell, and Dow higher, while Nasdaq kind of takes a break, little while. Overall, the momentum is very strong for Nasdaq, so I wouldn't expect anything significant to the downside. Maybe a little bit of sideways action, some modest pullback would be healthy, but I think the focus should be in these sectors because they have underperformed so far this year. So if investors decide to come back into these sectors because there is now less chance of an imminent recession, I think these sectors can continue to rebound a little bit. So let's quickly have a look at these sectors in a little bit detail. So let's look at healthcare, for example. So this is XLV. You can see that big drop, over the last few weeks, and then we have this bounce right here. So if it's able to clear this level, then it can gradually perhaps move to the top of this channel right here. If that's the case, this is the second heaviest weighted sector in S&P 500. So any further move to the upside in XLV is going to put upward pressure in S&P 500. So next up is financials, XLF. So this is the third heaviest. So you can see that ever since this banking crisis started, it's kind of going sideways, but making some progress. You can see that higher lows being formed, and it closed right underneath the previous swing high. So if it's able to get through this level, so this level is what number is that? It's around 33. So if it's able to get through 33 and move above this level, that should be positive. You can see that RSI has now gone above the zero line. MACD hasn't crossed back above the, RSI has crossed above the 50 level. MACD hasn't crossed above the zero line. So if we see further move to the upside, so this should put upward pressure on S&P 500. So I'm watching financial because there's been a lot of concern that about more banks failing or credit crunch, but so far the data suggests that the financial crisis is sort of contained. So if so, then we want to see the investors get back into the financial stocks. So I want to see whether or not it can take out this level 33 and move above. If so, that would be positive not just for this sector, but I think for S&P 500 as well. Industrials is another big sector for S&P 500 as well as Dow. You can see that it's been kind of trading within this zone for a long period of time. Now it's coming up toward the upper end of this zone. So if it's able to get through this zone, I think that would be positive. you can see that RSI has gone above the 50 level. MACD is crawled and it's beginning to move upwards. So if we see further move to the upside and break of this level, that should also put upward pressure in S&P 500. And then you've got smaller sectors like energy. You can see that they also went through a fairly big correction. This week we see some bounce. So if it can get through this level, which is what number is that? It's around 81. If it can get through this level, then you've got like a double bottom kind of a pattern right here. So that would be positive for this sector, and that would also put upward pressure on S&P 500. Obviously, you have the best performing sectors, XLK. So that's been going up on a very strongly. I wouldn't be surprised if, let's say, this sector kind of takes a break and maybe goes sideways for a while the other sectors pick up the slack. But this overall, this sector still looks very strong. If we look at XLC communication, so this is another strong sector. This has also been going up. So this could also kind of consolidate a little bit, but momentum remains strong, price action is strong. So overall, I would say that looking at the sectors, obviously the growth sectors definitely are in a very strong position. But if the defensive sectors can pick up some of the slacks, I definitely think that both S&P 500, Russell, and Dow can see further gains in coming weeks worth of trading. Well, I'll leave it at that. I thank you very much for watching the video. If you are new to this channel, please consider subscribing. Also, you can follow me on Twitter. I provide update during weekdays, market hours. So if I see any opportunities, I usually tweet it out. So you can also follow me there. Otherwise, thank you very much for watching the video. I hope to see you again in a future video. Thank you.